Welcome back to Breaking Barriers with the Barkers. Austin and Danielle here. And this video is our first time home purchase terminology video.
So this is our third video in our series of first-time home purchases that we're making for those first-time home buyers trying to find their way in this crazy world. So if you'd missed the first and second video in this series, then be sure to go and watch those. In our previous video, we talked about all of the costs that are included so you don't have any hidden fees when you are trying to purchase your home.
So this video right here is talking about all the crazy terms that are going to be involved when it comes to purchasing a home, because trust me, they're going to be throwing them out everywhere.
And lots of acronyms. That's the part where I was always like, what does that mean?
Right. So buckle up, because it might get a little boring. Hopefully not too boring. We're going to try and
Stick
make
with it. It's all important.
It's all very important. We're going to get you through it.
We started this video series because we have been through the home buying process twice now and have made fools of ourselves along the way. So we wanted to make sure that you guys can just zip into being professionals pretty much at this home buying process right away.
This word list that we're going to go over is a total of 25 words in alphabetical order, and 25 is the magic number that we dwindled it down to because there are so many terms.
There's more.
We will
put a link in the description below. What are you just trying to be the center of attention? What are you doing? Put a link to the list, the full list, in the description below, where if there are any others that you encounter that we didn't talk about in this video, then it would be a good place for you to look.
Right. So, with that, are you going to say let's get started?
Yeah.
With that, let's get started.
Boom. All right. Numero uno. Number one. For those that don't speak Spanish.
Number one
is agent. That is a licensed professional that helps you through all of the tricky parts of buying a house. Before we got into everything, I didn't think that they were really necessary, but they are definitely necessary because they help you to find the perfect fit for you, find the best house that fits your needs. They help you with price negotiations. They even sometimes can help you to find financing possibilities in case that's something that you're still looking into. So get an agent.
Yeah, so an agent will basically cover all of the paperwork, whether it's, the actual offer on the home, and will be kind of like this bridge or liaison for the whole process. And it's if you don't want to do that and have to do all the paperwork yourself, then an agent is good.
Number two is amortization. So amortized loans are the most common type of loan that you will encounter. And that's just the process of paying back the amount that they loaned you. So when you make your monthly mortgage payments, it's an accumulation of the principal, meaning the original amount of money that you paid or that you borrowed, as well as the interest, and they combine those two together, and that's your monthly payment.
Number three is annual percentage rate. This is the rate that is charged on the amount of money that you borrow for your home.
Yep. So anytime that you hear that it in advertisements that they'll say with a 4% APR.
APR,
blah,
yeah.
Blah. That's what APR is. Those are the start of those acronyms I was telling you about before.
Yeah, so you could be like, hey, guess what? I got a 3% APR. If you're at a fancy party or something.
Yep, that's what everybody wants to talk
on
about.
my mortgage.
Number four is appraisal. So, meaning when you are wanting to buy a house or sell your house, either one, there is an appraiser, which is a professional that comes in, assesses the value of your home to see how much that it can be sold for / how much you should pay for it. So that way, if you are new to this, then you're not going to end up paying $500,000 for a house that's only worth $100,000. If it's your first home, I wouldn't recommend getting a $500,000 house. But I'm just saying, they're going to make sure that you don't overpay for it.
Okay, guys, number 5 is assessment. And this is where they assess the property to tell you what is the value. Based on that value, that's how they decide what taxes you pay to the government.
Yep. All right, number 6 is a balloon payment loan. Now, you do not want to have one of these because normally when you get a loan, they'll tell you that the loan is for X amount of years. And with a balloon payment, again, be careful of those because say for instance, you have a loan that's set for 5 years. And then at the end of those 5 years, if you didn't pay it off because maybe you got like forgiveness for a few of those months, or maybe you just like weren't paying a whole lot of extra, you were like, oh, it'll work out eventually. At the end of that term, you're gonna have to pay the remaining amount all in one lump sum, which if you still have a lot left on your loan, that could be scary because all of a sudden you're in default of your loan and you could lose your house because you weren't aware of a balloon payment. So no balloons. Number 7 is closing. So that is the day once you and the seller have both entered into an agreement saying, hey, this is going to go down. I'm going to pay you this money for this. Then you will sign a contract that tells you your closing date. And pretty much that's just the day when everything is done. So that's when you have to pay the payment, give them, pay the piper. I know, I saw you smirk. So you have to pay for the down payment. That's when you receive the keys to your new house and all of that good stuff. So closing is the day that you sign the signatures. You sign the forms and get everything done and closed.
Nice little bow tie on the end. Number 8, conventional loan. This is a loan that is issued by a private party and it is not backed by the government. So normally what happens is that there are different programs and organizations that will actually like create the mortgages, and then the government comes back and says we will insure those mortgages, and that is one that is not insured.
Number 9 is a deed. So a deed is just a public document that makes sure that you are indeed the owner of the property.
Number 10 is for sell by owner. This is where you, like we said before, you don't have an agent, so you have to prepare all of the paperwork that is included with the process of buying a home. And a lot of people will tend to do a for sale by owner because they do not want to pay a commission to an agent. So they'll try to do everything like listing the home online, trying to find buyers, doing the open houses, putting up signs, and all that stuff on their own. Number 11, earnest money. Earnest money is where you will put money down on a home, basically a little deposit to say that, hey, I do intend to buy this home. It's kind of a show of good faith. Now, it is an actual like contract, so when you put that earnest money down, if you back out of buying the house after you put down money saying you would buy it, there's a good chance you're not going to get that money back. It's kind of just like a lost fund.
They say that it's for damages, I guess, because you are preventing someone else to put an offer in on that house because you were taking up that time saying, oh, I was going to buy it. Yeah. But good news about the earnest money, though, is the reason why it's a good idea is because if you are competing for like a property that lots of people are going after, if you put earnest money down, then that means that they're more likely going to go with you because they're like, oh, this person is serious. But then also that earnest money is applied in your closing. So it goes towards the money that you're going to have to pay at closing anyway. You're just paying part of it now by being like, hey, I'm serious. Number 12, pretty sure, is encumbrance. So an encumbrance is anything that restricts the use of your property. So sometimes there may be a lien on the place that you are buying, which just means that someone that had the house before you put the house up for collateral. And so even though that wasn't even your loan, if there is still the loan on the house, then that means that they could still come and take the house from you, even though that other person's not the owner. Now that gets kind of confusing. So just remember, encumbrances are something you need to ask for. Ask if there's anything that is currently attached to the property that may prevent you from enjoying it to the fullest.
Number 13 is equity. So equity is basically whatever the market value is of that property or your property minus the encumbrances. So anything like liens or what you would still owe on your mortgage. So say your home's value, sorry about the ding, is $140,000. That's the market value. And then you have liens of $100,000 or a mortgage left basically. You would have $40,000 in equity in your home. Number 14, we are rolling on to escrow. Escrow is where you have basically an agreement set up with a third party that they are going to be the ones that distribute your funds.
Mainly, it's for tax purposes. So think of your escrow account as like a mini bank account that somebody else takes part of your monthly payment, puts it in there, and then they pay whoever needs to be paid. And then you get a little statement.
So, number 15 is Fannie Mae. This is the largest loan organization in the United States. And so they are a private company, but their loans, their mortgages are backed by the U.S. government. They're insured by them.
Number 16, is the Federal Housing Administration, also known as the FHA. They're pretty much just the government entity that helps to regulate loans and set standards for how loans should be handled. But FHA is one of those acronyms that you'll hear a lot because number 17.
Number 17, FHA loan. This is a loan from the FHA organization. And basically what it is, it's for first-time home buyers, and they work with them to create a specific mortgage plan just for first-time home buyers. So you can put down 3% as a first-time home buyer through this loan.
Number 18 is a fixed interest rate. That's what it is. I remembered. All right, so a fixed interest rate just means that, remember when we talked about an APR before, the annual percentage rate?
Yeah.
Yeah.
Annual percentage rate.
Yeah, APR. Meaning that when you say, I want to buy this house, they tell you this is going to be your APR. Well, unless you have a fixed interest rate, then a few years down the road, they could be like, oh, wait, now this is your APR, and continue to raise it. So if you are going to get a loan, make sure that you ask them that it is a fixed interest rate, because that's the amount you will pay even if houses increase and the market increases and they want to charge you more in the future. They can't, because you got a fixed interest rate. Number 19.
Number 19 is Freddie Mac. That is just another company, a private company that also issues mortgages and loans. Yeah.
Another company that gives loans.
Yep. That's backed by the government.
Yep. All right. Number 20. We're getting close, guys. Thanks for sticking with us. Number 20 is the HOA, also known as the Homeowners Association. Now, if you are watching locally in Arkansas, this probably isn't such a big deal, but this is definitely for like California or states like that. They normally have HOAs. So what it is, it's just a group of people that live in that area that run an association, and they have standards of what houses have to look like, they all have different guidelines, but an example would be like they only want houses of X, Y, and Z colors allowed, or things like that. And so if you buy a house that is part of an HOA area, then you'll have to pay fees to be part of that HOA as well. You don't really have a choice.
It comes with the house.
Yeah, you don't really have a choice on it. Number 21 is a lien. That is just the financial claim of ownership that someone put the house up for collateral. We kind of talked about it earlier in the video, talking about encumbrances, but that is where someone tried to use that house as collateral for taking out an additional loan, and so then it has a lien, and these are not a good thing. You don't want a house that has a lien on it.
So, number 22, right?
Yep.
Principal. Principal is basically what the original loan amount is for. If you get a loan for a house and the market value is $140,000, then the $140,000 is the principal. Not, it's not counting the interest that you're gonna have to pay for getting the loan.
Okay, number 23 is an offer. So a lot of people, when they think an offer, that just means like, oh, well, I said I'd pay this much for your house. But there's more to it. So say you go and you look at a house with your agent because you got one like we told you to. And so then you're like, okay, I've decided I want to put an offer in on this house. What's going to happen is you are going to go and sit down with your agent, or if you didn't get an agent, then the agent that is selling that home, you would sit down with them, and you guys are going to put all in writing what you are offering, what changes you would like them to make to the property before you buy it, and have an estimated closing date. And there's so much more to it instead of just being like, hey, I'd pay 99.9 for it. Like, there's a lot to it. So an offer is a legal contract you put in saying, I would like to pay this much, but then it also includes all of this other stuff.
Next one, number 24, title. Yeah, title. This is a paper written document stating your ownership of that property, just like with a vehicle or real property.
Yep. Along with title also comes title insurance. So a title insurance is just something that goes along with that, meaning that someone, a professional, has sat down and done the research and says that it has a clear title, that there was no one else that could possibly even own that house, that it is fully yours. So number 25 is underwriting. So when you apply for a loan, either through a bank or a separate company like ones that he talked about, then the underwriter will look at all of your information, assess how much of a risk you are, and they're the ones that determine, yes, you can get a loan, or no, you may not. All right, that about wraps it up. Be sure to like and subscribe to our channel so that way you don't miss our next video in this home purchasing series, as well as all of our awesome travel vlogs and just keeping up with us.
Be sure to like our Facebook page. Stay there for updates. Stay on the page for updates.
Always.
Just keep refreshing.
Always stay on the page.
Just always.
Okay. Until next time.
on Breaking Barriers with the Barkers. Whoopsh. Just pull down the screen and then let your finger off and it'll refresh.
Glad you explained to them how they can refresh on their phone. Is follow up for our hold on. Started getting rambling.
Number 10, right?
8? 8.
Get on my property.
No, that'll go in the bloopers, but...
Get off my property. I already knew the next one. Oh. Number 11. I do not remember what number 11 is. God bless it. You just said the dang definition too. FHA loan, number 17.
This is derailing quickly. Bulls up.
You need to go outside? Come on.
All right.
I'm not getting up again. Letting everybody know I'm not getting up again.